One of those news came in from Abneesh Roy. So let's go straight to him. Abneesh Roy, Executive Director at Nuvama Institutional Equities, joins us on the show. Hi, Abneesh. Good to see you in as always. Colgate, even after a 40% cut on the stock price, the stock trades at roughly around 40 times. And the numbers, not very impressive. What's your view on it?
Yeah, hi, good morning. Yes, we'll prefer HUL over Colgate in terms of the two results which came. Colgate in Q3 will face the inverted duty structure. My sense is they will have to take pricing hike at some stage. Colgate, the issue is most of the raw material and obviously the advertising services are at 18% GST rate, while the end product, most of the company is now at 5%. So they will not be able to fully offset and the refund in services is not possible. So we will see margin pressure for Colgate. If the GST would not have happened, frankly, it would have been a slightly better scenario for Colgate from a margin perspective. But yes, in the LUP, in toothpaste also there is a LUP, and we will see the grammage addition there because the GST rate has been cut from 18 to 5. So on the grammage, slightly improvement will happen from November for all the GST categories where the GST rate cut has happened. But from a overall perspective, our topics will be Nestle, Britannia, Tata Consumer, Bikaji, etc. I think Colgate will be lower in terms of the pecking order. We'll prefer HUL from a Q4 perspective rather than Q3 perspective.
Abneesh, hi, morning. But, I take your point on margin and the fact that they're not getting the GST offset, and that could be an issue at the operational level. But I thought the other point in your note was very interesting in terms of just dealing with competitive intensity, because you point out in that note that Dabur's oral care portfolio is actually doing really well, but Colgate is suffering. So beyond margin and GST, is it a product positioning issue building up as well?
Three things. In terms of the MD, Prabha, definitely in terms of premiumization and focus and aggression, that initially led to a lot of benefit for Colgate. So if you remember, around 1 year back, Colgate stock and Colgate results were really good. So what happened after that was the other competitors like Dabur, HUL, Patanjali, all also copied the template. So essentially the competitive intensity, the freebies, the discounting, etc. really became common across the sector. If that happens, only customer wins, the companies don't win. The benefit for Dabur, HUL, etc., and both HUL and Dabur have done better in Q2 versus Colgate on a YOY basis. The Dabur numbers are not out, but we expect better performance there based on the business update also. So basically what has happened, clearly Dabur and HUL are more diversified, right? So they are able to absorb the competitive intensity pain and promotional pain in terms of being more diversified. But for Colgate, now with this GST inverted structure, they will have this one more challenge. My sense is at some stage they will have to take the pricing hike. From a base perspective, the volume, sales and margins, now it is there in the base, but GST is one additional issue in terms of the margin. So yes, you are absolutely right. Competitive intensity remains a problem. I think everyone now needs to understand that it is more about innovations and differentiation. Otherwise, competitive intensity in this category is on the higher side.
Got it, yeah. So slightly, broader question, Abneesh. Now, from a market and portfolio perspective, most people we speak to, nobody's talking about buying FMCG. Everybody's buying different parts of consumption. But if I talk about the staples basket, and if you look at the second half of the year, when the GST issue is supposed to be normalized and, the demand is really supposed to pick up, purely in terms of top-line growth, in the second half, what would be the pecking order? Which are the companies that are likely to lead? Maybe if you could name 2, 3, 4 in the order of growth priority.
Yeah, good question. Two things here will work out. One is, where is the grammage addition really helping? So for example, in Colgate, also lower unit pack will see grammage addition. But how it works is no one is going to brush more too much just because it's lower price or higher grammage. So it will benefit the food company, because food companies, if you see biscuits, snacks, etc., or even Maggi, for example, the consumer buys a pack. So in such cases, the volume grammage addition will benefit the volume straight away. That's why Nestle, Bikaji, Pidilite, Tata Consumer will be the outliers in terms of better performance in H2 versus the rest of the pack for this reason.
Okay, Nestle, Pidilite, Tata Consumer. Probably in
Britannia.
And Britannia. Okay, so the food guys basically should do better in terms of top line growth, volume growth in the second half. Got it. Makes total sense. We don't brush more, but we can definitely eat more. And that's where the benefits should accrue. Thank you, Abneesh, for joining in. Good conversation. Short one, but quite helpful.